Good morning, welcome to the Market View for Monday, the 28th of July 2014. Starting off with the British pound for Friday, you can see that the range was incredibly tight. And in fact, the total range for Friday's trading session was a mere 37 pips. However, that said, the market gave a potential sell signal. The market was filled. And then we can see the buying coming into the market just down here. And then prices reversing and trading all the way back up towards the stop. And unfortunately, or rather fortunately, the market didn't stop the trade out. It came within a couple of pips, and then the market reversed and moved back down to give us a second chance. But you can now see that the low from Thursday was lending support to the market, and prices actually attempted to trade through this, but then were brought back on each occasion. When this type of thing happens, we've seen it many times before, where the market will not break the entry price and you start to see green candles. The best thing you can do is to actually consider marking up after the above the green candle there, above the high, and there you can see around a 5 pip loss before the end of the trading session there, even if you waited until the first hour into before the close, really, because Friday night, of course, everything does shut down. On the overnight markets, since the markets opened in New York on Sunday night, you can see the markets doing more or less nothing. And just out of curiosity, let's just have a look and see where this is going to be the low for the session and the high. 8 pip trading range at the moment, so again, very quiet for this market. So let's move on and have a look at the daily chart. And again, you can see this on Friday, very, very narrow, tight trading range there. And the market finding support at the moment, trading down on Friday to the 169.70 level there, which we marked up during Friday's market view there. So not a lot to report as far as the pound is concerned, except notice how many red days we've got. 1, 2, 3, 4, 5, 6, 7, 8 trading days now. Not a green candle in sight. So again, the law of averages state that we should get some sort of a bounce here. Whether it's a dead cat one or not, then only remains to be seen. But at the moment, we are due for a bit of a turnaround in the market and some sort of support coming in. On the news front, one today, pending home sales, and this is forecast to be lower, so that may put some downward pressure on the Dow should the actual come out lower than the forecast, but in particular that the previous was based, and that shows a 6.1% improvement and forecast at minus 0.2, so that's a big drop of 6% or more. Should the actual come out at the forecasted figure there. And speaking of the Dow, Friday the market moved sharply lower, came off the lows, and on the overnight market at the moment we're seeing a bit of buying support coming into this market. And also you will notice why the market stopped at this level. If we go back to the 7th of July, that's the next low to the left. I'm just going to try this first, and we can see the market finding support at the 76% there. So should the market close through the 76% here that we've just marked up, then I would mark up 76% from this low up to this high. And then I just keep moving back just to find out where the support's going to be. But it's more than likely we're going to see the market move higher off this, unless, of course, the pending home sales figure is far worse than the actual forecasted figure there. And in the implied volatility, a small tick up in the implied on Friday because the market moved lower, and 993 for the IV and 703 for the historic, and then you can see this reflected down here in the implied volatility chart there. So that's really it for this morning. There's not a lot else I can offer. Market's still fairly quiet, still needing something just to shake them out of this sideways malaise that they've developed. So fingers crossed we actually get this this week. Right, that'll do it for me. All things being equal, see you tomorrow. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching.